Is today the start where the markets start coming down and working its way towards the gap? Look at the shooting star candle that formed today. After we've had several days of consolidation, we see the MACD indicator finally starting to roll over. Now, we come over and look at how the indices fared across the board today. The Dow was down 816 points. The NASDAQ was down 270 points. S&P 500 down 95 points, with the Russell 2000 being down 5.88. We look at advancing issues versus declining. Overwhelmingly, it was sell, sell, sell. We had 83.5% of issues declining on the day. Then as we come over and look at the sectors across the board, only one sector was able to eke it out in the green, and that was communication services. Everything else was in the red. The laggards out there today was real estate down 2.73, followed by healthcare down 2.03. So what really kicked off all the bad news out here today? We do see the fear and greed index did drop a little bit, but we are still well into greed because early on the markets was ripping and roaring. Look at the NASDAQ today. NASDAQ, we gapped lower, boom, came all the way back up, filled the gap, continued to move on. Then while I was at lunch, boom, we get the big drop out to the downside. We look at the volatility index out here today, and we see the VIX closing near session highs, however, up 15.49%, which really indicates that either tomorrow or Friday is likely going to be an up day in the market. And keep in mind, with Friday being the day before a holiday, it usually lends to a more bullish day in the market. Now, we woke up this morning, I woke up to this article right here. Bloomberg outage hits traders, disrupts government bond auction. Now, I think it's kind of funny that we see there's a problem with the bond auction with the Bloomberg terminal. Then at 101, when we got the 20-year bond auction, stocks tumble as weak bond market auction as investors wondering how U.S. will manage its debt. And again, a lot of this has to go on with the fact that we had the downgrade from Moody's. Everybody's like, what downgrade? Market's going to go ahead and run back to all-time highs. However, this is the first bond auction we've had since the Moody's downgrade. And now we can see there's not such a great appetite for bonds as we once had due to the loss of the AAA rating. We come over and look at the dollar index today. Look at the dollar index on the move lower. But then as we come over and look at the 10-year yield, this is something we've been talking about. We've been talking about this potential for an A to B equals C to D pattern. We need to get above the swing high right over here at about 4.58%. You can see today we not only got above that price point, we also closed above it. This is something you want to keep an eye on. Pay attention to the 10-year yield. If you see the yields continue to rise, that means stocks are likely going to continue to be under pressure. Then we come over and look at the precious metal gold. Gold today making it right up to that 61.8 Fibonacci level, right near that high volume area, which we've been talking about here for several days. Now this is going to be the question. Do we start to turn back down from that area? If there's going to be more uncertainty in the market, don't be surprised if we see gold trying to make its run all the way back up, maybe have a triple top, or can we say another new all-time high? Now, if you're wondering, is the Fed going to come in and save the markets and push rates all the way down to zero once they sense trouble out here in the market? When we come over and look at the Fed watch tool, we can still see as of today, the market is pricing in the first rate cut, not coming in until September. And again, we still have not felt the effects from all the tariffs and such. And if tariffs are going to push up inflation, is the Fed's hands going to be tied? And they're not going to be able to basically come out here and save the stock market. We also saw today Target absolutely getting destroyed. Target cut sales outlook as retailer blames tariffs, uncertainty, and backlash to DEI roll back. Now, if we come over and look at a chart of Target, we can see Target today was down $5.11 or down 5.21%. And Target did make an attempt to try to rally back and get into the gap. However, was not able to fill the gap. Now, I want to make you guys aware of 3 amazing prop firm deals. We have Take Profit Trader, 30% off all evaluation accounts, no activation fee. My Funded Futures, right now you get free reset with any evaluation account. And if you're new to My Funded Futures, you get 50% off any evaluation account. And Tradeify, the leader in straight to funded accounts, 35% all accounts, not just the straight to funded accounts, but also the growth and advanced plans, 35% off. Use code Mike. And to take advantage of these offers, use the links in the description box down below. Now, if we come over and look at the SPY real quick, SPY on the daily chart, notice what we do. We got that nice round effect. We have the MACD indicator on the daily chart starting to roll over. The 2 lines are now starting to pinch closer together. However, we do not have a bearish cross at this moment. Now, a couple of the areas we want to focus on, one is going to be that 38% retracement about 561.77, which also aligns with a high volume node off the composite profile at about 560.41. However, before that, can we get all the way down here, potentially fill in the gap, or will the market maybe come right up towards this doji candle top at about 570.36 and then reject, getting everybody caught off sides thinking, hey, we're going to fill the gap, and then they just turn it and run it back up. On the 4-hour chart, we talked about this yesterday. The MACD indicator just barely got across, and now we're starting to see more of a separation out here. Now, something I do have a problem with, however, is the fact that notice we had the gap down on yesterday. We did not make it all the way back up, fill in the gap. We had the gap down today. We came very close. However, we did not completely fill the gap. And then right here, this candle is when the bond auction took place. And then we just keep wedging on down. The MACD indicator on the 30-minute chart is extremely bearish at this moment, showing no signs of trying to firm up. We are below the zero line, about a 45-degree angle on the way down, and we have a good separation of the two lines. Now, something I talked about this morning and even yesterday, I said, watch out for this minus development area. One, we came down to it Monday, we rejected out. The second or third time, expected the break, and that's exactly what has transpired out here today. Now, if we zoom this out a little bit, what do you guys see? Do you guys see maybe this gap support could be where this market is trying to head? And then we'll see, can we come down, potentially fill in that gap that we had left behind from last week? Coming over real quick and looking at the futures markets on the 4-hour chart, here's that other minus development area we were talking about. One, we came into it last week, we rejected out. We tried to make a run down into it Monday. We came back up, making a new weekly high, and then we simply rolled over. One of the areas I was telling you guys to watch was value area high. I said, once we got back above it, if we get back below it, watch out for the point of control, watch out for that minus development area. And if we clear the other side, where is the next target location I've been speaking about? One is right here at this high volume node, which also correlates right on the edge of this minus development area. So now I want to go ahead and shade this area out, and that zone is going to be anywhere from a price point of 58.03 down here to about 57.68. If we breach below that, then we're really going to be looking to target that gap that we left behind from last Sunday. Keep in mind, as we zoom this chart out a bit, we have two consecutive untested point of controls. The lower one, 55.49.5. The next one, about 56.78. Now, as we come over and look at the 30-minute volume profiles, notice we did not quite make it towards the P point. So tonight, when the futures markets open up and we get the new P points, that's going to be a very high probability target. The P point will be in another location. Also, we're going to have two consecutive untested point of controls. The upper one about 59.60, the lower one down here about 59.47. Now, normally when we start getting stacked consecutive point of controls, quite often, we're going to come back and repair those areas. Now, something I do want to bring your attention to, if we start breaking above value area low, which comes in at a price point of 58.84 then instead of using the point of control as target number one, since it's so high up, there's a couple other areas we could look at. One would be this structure breakdown point right over here. You can see we broke through it. However, we have already tested it on the very next candle. So it's not as powerful as the target location, but I would still want to go ahead and give it another shot for a target location. Another area could be this thick part of the volume profile. We have a lot of volume being built out right around 59.29. Then look to target the point of control up here about 59.47 above that. Then we have value area high at 59.56.25. Then I'd want to target that point of control at 59.60 Now, if the markets are going to have a big comeback tomorrow, what is going to be the driving factor? Well, if we look tomorrow morning, we do have news coming out. We come over and look at 8:30. We have the weekly unemployment claims. Now, if that comes in horrible, that could actually accelerate some of that selling we saw today. Then at 9:45, we have flash manufacturing PMI. Then we also have flash services PMI. 10 a.m., we have existing home sales. We have a couple of FOMC members speaking throughout the day. So maybe early on, we'll have the catalyst to get the markets moving a bit lower. Jumping over and taking a look at the QQQs real quick, we had that shooting star type of candle, and it really looks like the market at minimum wants to make it down towards this gap support. However, tonight, if you're trading the futures markets, do we bounce up first, or could this be nothing more than a trap, getting all the bears excited, saying, you know what, here we go, we're about to drop lower. and then the market just rips right back up. The MACD indicator on the daily chart trying to cross to the downside. You can see the lines pinching together, and we've started to build out quite a bit of volume up in this area. So as we start closing below that area, watch for the market to trade within this area here and then work its way down towards some of these other high volume areas, 489 down to about 478 or so. We also have that 38% retracement at about 486. Keep in mind, the 38% retracement is a minor retracement and what could still be a very bullish move in this market. On the 4-hour chart, the MACD indicators are across and the separation is very good, about a 45-degree angle on the way down. And on the 30-minute chart, we can see that nasty red candle that we had today. We can see the NASDAQ was the strongest indice before that bond auction, and then it just simply gave it up. On the 30-minute chart, the MACD indicator does have a good separation of the two lines. We are well below the zero line. So don't be surprised if we start to firm up a bit. Maybe the market bounces up a little bit and then we simply roll right back over. Now, some of the areas I would want to focus on would be right here, right near the low of today's candle at about 516. Do we bounce up there and then maybe roll back over? We can also grab our Fibonacci retracement tool, measure swing high down to the swing low, and notice and watch the 38, 50, and 61.8 Fibonacci levels. Quite often, market will bounce up towards those levels or reject back down. Notice today we're closing below value area low, which is something I forgot to mention on the S&P 500. Whenever we close below value, expect the market to come back towards that area and test it within the next 1 to 2 days. And let me just bring that back over for the S&P real quick. Notice on the S&P, we're closing way below value area low. So if you're a buy side only trader, that value area low could be a very high probability target for you. Now, jumping over and taking a look at the NASDAQ futures, you can see we're coming down, retesting the lows that we saw earlier this week. And now the question is, do we start to bounce out? As we look at the minus development area that we've had, this is going to be this whole zone right up in here. And notice earlier on Monday, we came into that zone, rejected out. We came back into it today, and are we going to bounce out again? If we bounce out again, we come in a third time. I expect on the third time we would break and then start working our way down towards this next minus development area on the profile, anywhere from about 20,687 down here to about 20,589. Below that, watch out for gap support and then see, can we make it all the way down here, fill in the gap, and maybe taking out that untested point of control at 20,135. Keep in mind, we still have 2 consecutive untested point of controls down here, and we'll see if we see enough weakness to get the market all the way down towards those price points. Coming over and look at the daily volume profile real quick. Here's the lower level that we left out on the live stream. We made it all the way down towards that level. Now the question is, will we be able to bounce out? Notice the NASDAQ is not as far away from value area low as what we saw with the S&P. Value area low on the NASDAQ will come in at about 21,168.50. The point of control is going to be way up here at 21,388.5, and value area high will be up here about 21,424.75. Now, if I'm playing a volume profile rotation on the way up, I'm not going to use this point of control as target number 1. It's just way too high up there. Instead, I'm going to use this structure breakdown point, even though this area has already been retested. You can see we broke, instantly came right back through it. We came down again. We almost made it back up towards it. So again, I think I like it for a target. I don't really like it as an area for a rejection point on the way back down. Then we can go ahead and target either this high volume area right here, or maybe towards this minus development area at about 21,347. Anything beyond that, I want to target the additional volume profile levels and then see if we can also push all the way up here towards the high volume node, about 21,511. Keep in mind, nothing goes straight down, nothing goes straight up. If we see a bounce up, I'm looking for other areas to re-engage on the sell side of this market. Now, if I don't mess everything up, I got to make another $280 in my Tradeify account. And if you don't want to have a hard time getting a payout with Tradeify, you want to make sure you don't do this one thing. And to see what that is, watch this next video right here.